What is good, y'all? What is up? I'm gonna give you guys a little breakdown on some trades that went on today. Um, Today was a little bit of a lesson for me today. Some days, some days are lessons, some days are just, good days and bad days. But we take the lessons as they come, and we take the wins as they come as well. Nothing different. Um, but today I was participating in this move. I was looking for this reaction today after seeing a lot of this. But I'm going to get into the reasons why I entered and what I realize now what I should have done before getting into it. But shout out to the people that watch this and like, comment, subscribe. Let your boy know what kind of pairs you want to look at. I'm gonna, hopefully along this journey, keep sharing what I've learned for other people. And then at the same time, if you guys want to drop things that you guys want me to look at, and maybe suggestions and tips on videos you guys want me to make about Forex, what I've learned. But there's still a lot I gotta learn and mastering my, some of the inconsistencies of me, just like patience, waiting for price to come back to areas that I want to see price come to. But all in all, so this is what I was kind of had been looking at. When you look at Forex in general, it's a currency. We trade foreign exchange currency, so we're trading the fluctuations of price at any given moment. And so what I was looking at relatively for the day. So if I'm looking on a higher time frame, if I were to look at the monthly, weekly, daily, all that, it's going to point to evidence of, price coming up higher, right? Prices coming up higher, right? So if I marked my last high, right, this would be the high of my trading range. And then if I mark the last low of the trading range, you can count this as your a lower high before it made a higher high or a higher low. Sorry, this would be your higher low. Oops. I might go here. There you go. Okay, so then this you consider your first trading range for your overall higher time frame perspective, right? As you can see, it really didn't respect this last lower or higher low before making a higher high. Higher high and higher lows, or lower high and higher low. Higher low, higher highs. Sorry, I'm backwards on it. But okay, so what happened in this range right here? We should have, if we were continuing on this bullish trend of going higher after this, really we should never break below. We haven't broke below here, so these two lines right here are technically considered your trading range. And so there's three things that price can do. Price either goes up, it goes sideways, or it goes down, right? So if you look in here, price is kind of just going sideways right now, right? We're not really doing what we want to see like it is here. But what do we see right here? It's starting to do what we want, my targets right now overall on a higher time frame. See, I'm still talking about higher time frame perspective. I would like to come down in here, peel down, but I wouldn't be surprised, if we stop somewhere in here, pull back up for a little bit before we peel down. But price does what it wants when it wants, no regards to who's in the market at any time. So that's our trading range right here, right? So then if you look, we made this high, right? And we made a lower high, right? But we came back up. When we came back up here, we made a higher low because we closed below this structure, right? right in here, we close below that structure. So to me, I would want to be shorting anywhere in here on a higher time frame perspective, you know, for intraday. So if I'm looking at the 4 hour, I would want to be looking, you know, at the 1 or the 30-minute time frame back in this area. See in here in this area to ride this thing down, because we've closed below here. Closed below here. We came back up to test this area, closed below here. So then that's your confirmations of sign that price is going to go down, right? And if people know how to trade gold, if you were to collect 200 pips, 200 points, whatever you want to call it, that is, you don't need to be trading for the week after that. But I'm going to break down over here in this area what I was trying to do to ride this down and what I should have done. So without further ado, you know, we're going to take all this stuff off, these drawings real quick. So I'm still looking at price on a 4 hour, right? I want price to always, if I'm still looking to short the market to go down, I'm gonna want price to continually close below this last high. It needs to close below here to make a lower high, because price makes a high, it'll make a low. Then it makes a higher or a lower high because it's closing lower than this last high, and it should make another lower low. But yet we failed to do that here. But mind you, it's on a higher time frame perspective. If I went down to a lower time frame perspective, all along in here it would be showing me bearishness to go down. But you have to understand, we're still in a overall bullish trend. So there's there's a limit to how far we can go down at any given time, because the market moves in waves. It's not going to just all of a sudden flood down in one day. Because if it did that, then I guess everybody would be rich. But it doesn't happen like that. So I'm going to come over to what I'm seeing here. You know, I'm still seeing this range in here. I'm still seeing it close. We broke this area. What I like to do is this will start making sense when you see it happen over and over. Okay. What happened here? We had some equal highs right here, right? To most people, when you put a line right here, they're thinking price can't go up. That's what you're taught. There's a resistance, and then there's something called a support. So this is your resistance because price failed to break above, so it's restricting you to go higher. This is your support, so this is what's supporting you to go higher. Does that make sense? So if you want to go higher, you want price to form some sort of support, like it did here, and it went higher. If you want it to go lower, you want price to find some sort of resistance and push back lower. That's all it is. Up, down, up, down, up, down. So what I was trying to participate in was price in this area. Man, I'm hurt today. I'm really hurt. This was the move. So I already know, as I'm seeing in this price action here, what we call price action. I don't trade indicators. I don't trade. I'm just naked chart and just looking at candlesticks, right? Price made a high, made a low, lower high, higher low, because this was a higher low. We're kind of ranging, you can say, moving around. We broke this area, right? But we never broke above here, right? We kind of consolidated in here, made a hard resistance right here. So realistically, if you're wanting to sell this and you had buku money, you know, or you had enough to withstand the drawdown, and drawdown is just drawdown So this would be your stop loss in this area, the red. The red is where you're saying price, your entry would be here, right? Where this line is in between the green and red is where you got into the market. So say I got into the market where I wanted it to. It was at 1805.50. Obviously that candle hasn't printed because I went back below. But if you had money, you could, nobody's running a 120 pip stop. This is just hypothetical. Or even if we're up here, let's just make it easy and put it right up here. If you've seen this over time and over time, you see this, how it's closing as this resistance. And say I got in here once we made this, right? Once we push into here, if I had a 68 pip stop loss and just held it, drawdown essentially would mean if price came into this area, right? If price is coming into the negative area after I've already taken my entry right here, price is coming up into this area, and if it passes this area, if it goes outside of the red, that's when it takes you out of the market. So drawdown is anything that you're in negative balance. And then obviously anything that goes into profit is just, blues all day. That's what we like to call it over here. Forex, your screen goes blue on the platform that you use. So with that being said, most people, unless you're swing trading, aren't going to have a 68 pip stop loss unless you have a crazy big account size to be able to hold that amount of drawdown if price were to come up there. But if you're taking clean entries when you're entering the market, you don't have to have that big of a stop loss because you've had your confirmations that price is in fact going to go lower. So, but if I was to selling up here and you had all these confirmations on a higher time frame, I mean, like realistically, you're okay. You should be safe. It's just a buffer, so that way you don't lose more than what you accounted for, really. So with that being said, let's get rid of that. I'm going to go down to a 1 hour perspective. So this is on the 1 hour. Mind you, you're still in this bearish trend, right? What I want to show you on a lower time frame here is in this area. These were key areas. One right here, right? This, I bet you if I looked up right now, this big up thrust candle right here. Whew. Gave me chills looking at this right here. Even more confirmation. That's really what got me. Okay. So this was your low, your trading range, right? Remember how I said that was a lower high inside this range? What happened here? Price action. Price action closed below this. So we did make a lower high inside of our trading range. That's why you have to be mindful. I actually just learned about the trading range, tool that you could use through Trade House. They really had a breakthrough just recently on that, finding your range and then understanding how to capitalize on the counter trends, because the counter trend right now is what I'm doing. I'm trying to sell the counter trend. A counter trend is doing the opposite of what the actual trend is. So on a higher time frame perspective for gold, we're bullish, which means we're going up. And so if we're going up, why would I be selling, right? So when you're selling it, you're going against the actual trend, which is opposite counter trend. That's what we call it. So obviously price can't just keep rallying up forever. If everybody just clicked buy, obviously, it wouldn't be anybody in the markets really. So we made another low in here, but it's interesting if you watched what transpired inside of this whole movement in here. So this to me is what's funny. We're bearish, right? We're seeing that we're bearish. Most people, when they see that this support or this resistance right here, are thinking price is going to break down. What happened here? Price broke down when it got in here, made another low, came down, but we came up. We're just consolidating in here. Price isn't really doing anything. But we had this fast explosion. Look, this candle that pushed up and then pulled down. So that's what I call hedging, right? It shot up 30 pips and then pulled down 70. That's a big move. And if you see how I have this black line right here, that most people are seeing this black line as what you would learn as a resistance and support. So support and resistance line. This right here is like what I was talking about earlier. This is your resistance. Obviously price can't push up, and that's your support. So people are putting their stop losses here, what we talked about over here, this stop loss. People are putting their positions right here, saying, price isn't gonna come up here. I'm gonna buy it right in here, right? 30 pip stop loss. I'm gonna write it down, right? Gonna write it down to that next low, that lower high that we made, or the lower low that we made in the range. Obviously you can see that we did achieve that, but what happened to everybody that tried to get in at that time? They got stopped out. And if you look right here, if I put this across and I go like this, get rid of this so you guys don't get confused on what's going on. What banks just did? What did the banks just do big time? Everybody put their stop losses right here, right on this line. So they thought price, when it came back into this area after it made another low for us, so more evidence that we're short selling. Price always comes back for you. It always will. Somehow, in some way, price will always come back for you. What happened though? We had all these people already in here selling, right? So they're holding their positions because we made another low. And so, because it's making low, so more people are like, okay, let me just sell it again. They sold it again, right? Here is when the banks will come in and take people out of the market. And then if you look at market timing, when this happened, 6 a.m. 6 a.m., this is my time. That's 30 minutes before market open. So this is the most where most institutions are getting in. If I put session timing right here, and if you look at these are the main times from 3 to about 9 a.m. Boom, right here, happened here. 100 pips, 100 pips, 100 pips. Always is moving around 100 pips, 150 pips in a day. That's big market movement. And these are just grid lines for the different sessions. You got your Asian session, you got your London session, you got your New York session, and then these are like the layover times between the two. But I'm not gonna confuse y'all with that. So if you see right here, they stopped everybody out, right? Went into some serious profit, sold again, right? Bought price backups into this area, right? They have to mitigate. They have to come into this area because this was the last time, this was the last lower high in that trading range, right? We made another lower high, right? So it's always going to come back into this area because this is where all orders are sitting for more people to get into the market. This is where investors, hedge funds are all have their orders ready, but they want retail traders like us to get in here and think that they're going to make some money. As you can, but you have to understand what's going on with the big banks that move a $5 trillion a day. Yes, I said 5 trillion. New York Stock Exchange is only pushing about 22 billion. So correct me if I'm wrong, but those are facts. They ran these people out, but what do? They came down, right? Entice more people to sell again because people know it's selling. People know it's going to sell off because we're closing. We're making lows, right? Ran them up again, and then immediately saw this fast price action falling, right? We fell. And if you look at the time we sold, we did this during the New York session. This is still New York session, but we fell for the rest of the day going into that next New York session. So we fell all night and through Asian session, London session, and then into New York session, we reversed, right? But what did we do? We made another low. We beat this last low. So price is always going to come back again, right? But at this time, this is when you have to understand, okay, how far can we counter trend? How far can we drop? Because higher time frames are showing us that we're going up. So that's when you have to be careful. So what do? We had this consolidation, remember, sideways movement. People right here are seeing that there's a nice resistance. So what do? They put their stop loss here again, right? Stop loss here. Then they start getting into some profit. Okay. All of a sudden, this huge candle just comes out of nowhere, right? Runs up, takes out everybody in here again, because there's some people that have stop losses up here, all the way up in here, all the way up in here. But realistically, investors aren't gonna, because they're hedging their positions, which means they're putting their positions slowly into the market. They're letting price come back up, put some more in here, in here, in here, because overall what they want to do is, move the market in trends, because it allows everybody to have time to get into the market. Because if the market is moving about 5 trillion a day, and a hedge fund pushes the button and puts in a million, like, positions, what do you think is going to happen? Something crazy is going to happen. And this is the evidence that we look for. This is what you want to see when you get into the market. You want to wait for evidence. This is when you know that banks are getting into some kind of positioning. So if you see that we've closed below this area, remember this is the top of our high that we made of structure wise. The candle closed, the body actually closed below here. The body closed below, the body closed below, the body closed below this right here. See this? Those two candles, these candles closed, closed, closed. But funny thing again, what happened here? And it's not going to be to the pipette or to the to the exact T, but I put this over the top like that, just so you can visualize and see what they do. Because most people see how we're talking about body of the structure. What do? They ran up really fast, right? Most people are putting their stops above this high, above the candle bodies. They're putting their stops here, so they think that because price has a resistance, it hasn't broke above here, it's not going up, so let's sell it again, right? Because what do you see in here? If you look left, because price is always going to tell you left, after this big expansion, when we knew price came in, when these big investors came in and still closed below here, but we just tapped everybody out, wanted to get all these people's money, take them out of the market, make them lose money. And when we closed down lower again above here, even though we broke this range here, like we broke this high right here, and made another higher high in the range, because technically this was the last lower high. This was a lower high, but then we just made a higher low inside of this range, inside of this trading range for the day. It gets intricate, but you just got to take your time and just watch it over and over and over, and it happens. So then what do they do again? They ran people out again, and then they sold down. But now if you look at this previous resistance right here, what happens here? We wait for that retest. It retested it. It fell again after it broke this structure, after it ran up and it broke here. So then we made another lower high. We're making lows again in this range. So that's more weakness that you're seeing in there. And this is a high time frame perspective. 1 hour is still pretty good confirmation. We broke up and came down again. And we tested this area. You see this area in here, how it's respecting it. That's where institutions are playing in. So if you see this movement like that, that's when you know, okay, it's time to start getting in. I was a little late to the game. I should have got in. Honestly, I've been here. This retest on this close, this is when you take your entries realistically. After I've already seen this evidence here, you take your entries. But I saw this here. It's a consolidation. I was seeing it, and when price consolidates, it breaks out heavy. So I was waiting for that impulsive move, right? And you get it over and over. So if we go down to 30-minute perspective, this is where we were today. At 5:30, we had retail sales that came out. Retail sales is obviously retail sales data, core retail sales data. And so if you look at it, the change in total value of assets retail, excluding automobiles. Automobile sales account for 20% of retail sales, but they also tend to be very volatile and distort underlying trend. The core data is therefore thought to be better gauge of spending the trend. It's just showing you just actual currency, that what people are spending, what retail are spending in the economy. So during the whole coronavirus, as you could see, and so if it's saying, says it's so obviously we're in July, but these are June's number because it's reporting the previous month. So as you can see, April was really when coronavirus hit hard, and it came out in May, and it was very bad numbers. They only expected negative 8% in retail sales, but we were almost double that. May, we were starting to unlock a little bit. June's numbers just came out, and they're better. So obviously, I took that into consideration as, okay, good numbers, good positive numbers, and gold is a safe haven. And what I mean by safe haven is investors flock to gold as a safe haven because it just holds its value. Just like silver, gold, everything during, how everything used to be bought off the gold standard. We were taking off the gold standard. When was it? During Reagan? Not Reagan. I'm tripping. Something around that era. We got taken off the gold standard, right? But investors still use that as, to buy, physical holdings of gold during uncertainty in the markets. And as we've seen from gold rallying, last year, right before, November, we were in the $1,400-$1,500, an ounce. Now we're into $1,800. So that should just give you a little sign of, what's really going on in our economy. If gold is rising and people are buying up gold, that means investors are still, afraid or just uncertain on the markets, and they're preparing for times, as you could say. Just holding physical gold is better than putting their money into a risky, stock exchange that companies right now aren't really showing their true, evaluation just due to the market conditions. But so this was at the 5:30 candle right here. And so I always talk about, if you look left, price always does the same thing over and over again. So this is what I had seen at this point there. Yeah, there's some, really I wanted to see price come up into here. This was my point of interest. It didn't happen. At the time I wanted. There's always, I talk about time and day, and then being patient for that setup. I just wasn't patient, and it bit me. So if I look at this 15-minute perspective right here, 5:30, what did we do? We came down. We had these equal highs almost, you could say. Again, this is what institutions love, right? Because we're printing what you want to see. We're printing the trend of lower lows and lower highs, sells. So what do you see here? You got people in here thinking that this is a nice support. I can start buying up, right? What are people doing in here right now? Most people are seeing this as what? Like kind of like another support, right? Well, Amani, why are you selling if you're seeing this is not opposite of what you want? This is a low. It made a high. It made a lower high in the range because we're staying above this last low. So that'd be a lower high, right? But no. Oh, I'm sorry, a higher. This would be a higher low. I don't know why I said that. That'd be a higher low. And so, but overall, this is a 15-minute time frame right now. So we're in a 15-minute time frame perspective. So that's a lot less confirmation. So you want to stay on the higher time frame confirmations to know what's going on, because The lower time frames are just printing, data really quick. This is confirmed, what's really the trend that's really happening. And then this is where you're taking your entries off of. So I'm taking my entries off these lower time frames to actually execute when I know where price is at. So then if I do this, I saw that candle, what did it do? It took out all these people at 5:30. It bought up, right? So that's what they do. They do the opposite. So why would gold go up if the data was good? Wouldn't that be opposite? So investors wouldn't want to be in gold if it was good numbers. So what did they do? Everybody on here probably just thought, oh, gold's going up because the overall time frame, yes, it is going to go up, but it doesn't need to go up right now because we're stable right now in a sense for the day. Because mind you, this is a lower time frame, only 15 minutes. This is going on currently. These higher time frames overall economically, it's going up, but lower we're gonna go down. Next thing that happens, we broke, right? That's what I saw. I saw the 6 a.m. candle break. After that, it pulled back again. Now I'm seeing into the lower time frame. We're just consolidating here. So then New York opens, right? People are buying up. What happens? We get this expansion right here. And this is when I started noticing something. I was like, strange. Whoops, too far. I had already entered the market. Whoops. Come on. There we go. Okay, this is when you can't get caught up. So, they already ran the highs once, right? So I thought, okay, I saw this evidence. It kept pushing up, though. That's what I didn't like. It was just kept pushing up after they ran the highs. They didn't really clear these lows. And right here, we had some more equal lows. People setting their stop losses in this area, mainly right in here. So they're at least going to come take those double bottoms right here. For sure. When you see a double bottom, they're coming for you. Double bottom, double top, whatever you want to say. So I'm in a smaller time frame perspective. I saw this. I saw it break. I saw it break down again here. But what I didn't wait for was the pullback. I should have waited for this pullback in this area also. Because if you ran your fibs from the low to the high, we are already trading at that 50%. After we came down here, after we made this institutional move right here, this is where all your price action is, the heaviest. Mind you, it's time of day, 6 a.m., market open. 50% is almost like an equilibrium for a price to retrace to, if you could say. This tool that I'm using is called like a fib retracement tool. It's just pretty much what, fib retracement is just a retracement of price, how far price can counter trend, what I was talking about, or retrace, which is a pullback. It's just gonna, after it makes a low, it's gonna make a lower high like it did here. So price came down and it pulled back. So this retracement tool would tell you, right? It will tell you where price should pull back to. And if you see off just that, this was my first confirmation, and then we made another low. This is a sweet spot in here, that 71 to 88.5. This is where a key discounted price. The fib tool is just another, like I said, a retracement to tell you where price can pull back to before going down in the trend that you want. But the whole design of this is where it's just a heavily discounted price. So price pulled back 71% of its overall move. And so that's just a healthy area for price to continue the trend overall. So me entering a little too quickly. You see how price and I look for it all the time, and sometimes I just don't wait for it, but I should have waited on this one. What I saw was this. So I get down to a small time frame, and that's what you can't get caught in, is a small time frame perspective sometimes. That's what, something I'm learning. So after this whole move in here, right, we had this up move, right? We had this whole up move, right? Closed above here. But that was the liquidity sweep that we talked about. It just came back up into this area, right? This is another area that price previously consolidated in before it making its move down. So, this would be an area that you want to watch and see how price action is developing. So what I saw in there, for my reasoning to get in here, this is where I had got in. One, look at this wick. Look at this wick here. So if you have this wick and you see this wick, what I like to do also is I look for imbalances in the market area that price didn't, previously trade at. Could explain that later, but it won't make sense right now. Time of day, it was a little off my time, which I should have waited because this is now getting into the later times of the New York session. So later in the day is when things will start dumping off, and as the trend will continue for what their agenda is. So this is what I had in mind. I saw that price had one, we broke here, right? We broke all this. Again, we made a low within this. So all this in here was now canceled, you could say. That price action or the trade all in here doesn't matter, because now we're continuing that overall in this 4 to 1 to 30-minute time frame. We're continuing that down movement, heavy down movement. If you look at those candles, it took 3 candles to get back down, but how many candles did it take to get up to here? So then I saw this massive candle push up very hard after it already made this move, and so to me that was another confirmation that, okay, maybe price is gonna react at this level, just because this was where it broke structure at. And once you see how gold moves, sometimes it doesn't retest their highs, but this is something to learn from, at least for me too. But as you see, like, just looking at structure, how I had this line, it played out pretty smooth if I would have waited for it. Sheesh. So yeah, this was the move that I participated in, and so I pretty much had my had entered right here off this next candle. Had my stops here. I had a 10 pip stop, which is very, very minimal, especially on gold. And I was targeting, my first target was to take these lows out right here. So it was a, yeah, it was a 1 to 7 or a 1 to 1 almost. But I really wasn't, I was honestly targeting TP 1 and 2. So my first TP after that would have been right here, and right here. And as you can see, it's already smashed all those TPs. Realistically, you want to go for a 1 to 3, so risking 1% to get 3% on your account. It's all a numbers game at the end of the day. But as you can see, price retraced back up into this area, and what I should have waited for is candles like this. What's fast, remember that what's fast doesn't last. So 9 times out of 10, this fast price action is going to get filled in before the continuation. But with gold, sometimes it doesn't do that. It can move like it did 100 pips from at least my entry. It was up 70. From this entry, it would have been up 100, I think it was. Original TP would have been up about 100. 90 pips, 90 pips. If you're making 90 pips, boy, see you later. But yeah, this was just something to to look at and understand for next time, one for the books. But I hope this video made sense. Shout out to the people that view this. Hit that comment, like, subscribe button. Let me know what kind of pairs you want me to look at. Hope this was education was good. Let me know if y'all need to change anything for y'all or what you guys want to see. This is my first video, I'm trying to just put my stuff out there, but have fun with it. So hope you guys like this, and I'll talk to you guys later. Wow. Yes, sir.